Hey guys, how's it going? This video is going to be a different video than my past videos because mostly I just want this to be a conversation between you watching this and me, okay? Friend to friend. I'm probably not going to even edit too much of this. I will show you a few bits on my screen and I've got a few notes prepared, but there are some things that I feel I have to say, okay? As someone that's in the investing world, I feel like there's too many people going down the wrong path, at least in my opinion, and at least that's what data suggests. Okay, so basically, today is the what is today? The 18th, the 19th of March, 2020. Okay, we are probably at the beginning of the coronavirus epidemic. Okay, it's spreading all around the world. It's hit Spain pretty badly. Okay, I live in Spain. We are currently homebound. We're not allowed to leave the house except for to buy groceries or to go to the pharmacy. Okay, we have to stay at home. The government's been quite stern about that. Now, this is probably going to get a lot worse before it gets better. Okay, now I'm not really going to talk about the coronavirus itself. Okay, I've been consuming the media a little bit too much probably, but what I am going to talk about is the market and the effect that the coronavirus has had on the market. Because the stock market, let's be honest, if you are at all interested in the stock market, you will have noticed that it has tanked completely, okay? And in fact, I've got some notes here, some old school pen and paper notes. Basically, today, the S&P 500, and in fact, I'm gonna show it on your screen, it's around, 2,400 more or less. 1 month ago, all right, so let's see, look, 19th of February, 2020, it was pretty much 1,000 points higher, okay? This is a drop, at least as of today, of 29%, guys, okay? Almost 30% of theoretical value has vanished from the S&P 500, all right? Now, this is now known as a bear market, okay? And in fact, I've got some definitions here for you. These are some screenshots from my course, Freedom with Dividends, in which I talk about, bull and bear markets and stuff, right? It's an important lesson. But basically, a bear market is a drop in over 20% in less than 2 months, okay? In the overall kind of stock market, or at least the country's stock market. And actually, on average, there is one every around 3.5 years, more or less. Now, then a recession, which, that's something that gets confused quite a lot. People kind of use bear markets and recessions interchangeably. They're not the same, okay? A recession is an economic term. It basically means that a country has had 2 consecutive quarters of negative GDP, okay? Now, there can actually be recessions without bear markets, okay? But in this situation, I'm pretty sure that most countries will experience recessions, okay? The economy is going to scale back, okay? Companies are going to make fewer profits because of the virus, okay? Now, just to give you some more perspective about recessions and about bear markets, okay? Let's look at what the S&P 500 has done historically, okay? So on your screen right now, let's really expand the dates, okay? So from the very beginning, it is inflation adjusted and it shows recessions, okay? Now, you might recognize, the dot-com bubble crash, okay? Bam, the market lost a lot of money, and the Great Recession as well, okay? We are now experiencing one that has lost a similar amount, but not quite as bad, okay? Because actually, if we then, if we just zoom in, okay? I want to get the real data. So in the dot-com bubble, the market went from 2,200 all the way down to 1,100, all right? That is roughly a 43% decrease, but it lasted quite a long time, okay? It actually lasted from, let's see, from August 2000 till March 2003. Or guys, if you take this point, it will be September 2002, right? So quite a long time. Now, what happened then in the Great Recession is that it went down by actually a lot more and a lot more quickly, okay? It actually lost 53% of its value, okay? And I am talking about the S&P 500, okay? This basically tracks the market. So, whatever happens to the S&P 500, it's pretty similar if you look at the overall market of at least the United States, okay? It is similar in other countries, but The United States is the main power in the world, okay? So whatever happens to the stock market reflects on other stock markets. Now, what I want to show you first, okay? First of all, the fact that, 53% of the value of the S&P 500 was lost in quite a short amount of time. But what we're experiencing here is, a much shorter time frame, okay? Within a month, 1 month ago, we were 30% higher. So basically, guys, this has all happened very, very quickly, okay? Within a matter of weeks, a lot of money has been lost in the stock market, okay? But let me tell you why I made this video, okay? Again, I'm not gonna talk about macroeconomics, okay? Well, maybe a bit, but not too much. About you, it's all about you, okay? It's all about you as an investor, okay? And if you haven't started investing, this is one of the best opportunities you're probably going to have for a very long time, okay? That's kind of the main message I wanted to transmit. And the reason behind that is that, we all know that you're meant to, buy low and sell high, okay? That's kind of the basis of investing. I'm sure you've heard that expression in the past, and perhaps you even claim to want to do that as well, okay? Buy low, sell high, or at least buy low, and then, perhaps hold your investments for a very long time. But that's not really what's happening with the market shows, okay? It actually shows people panicking. People expecting, the coronavirus to completely destroy the world, which even in the worst of estimates where, millions of people die, which is terrible, obviously, the world's not going to end, okay? Sure, there'll be a few bad years the companies will have a few bad years, especially 2020, perhaps 2021, but it always recovers, guys, okay? The market always recovers. So that's kind of the main point I wanted to make, all right? Let me also show you some data. Bear markets, okay, what we are living in right now, last an average of 1.4 years. And the average cumulative return, or the loss, it's a negative cumulative return, is 41%, okay? 41% loss. So if the market stops right now at minus 30, this is not really a bad bear market, okay? I expect this to get worse, personally. I don't know if it's going to go to 40, 50, 60% loss, okay? Anything is possible. But what I want you to really focus on is that duration, all right? 1.4 years. It's just not very long at all, okay? And when you then compare it to how long bull markets last, on average, that's 9.1 years, okay? We just got out of, I think, the longest bull market in history, in recorded history in the American market. It's lasted around 11 years, okay? But the average bull market lasts 9.1 years, and the average cumulative return is an amazing 473%, okay? So right there you can see that for every bear market, you get 9 years of... for every one bear market, you get 9 bull markets, all right? That's what the data suggests, more or less, okay? I might be exaggerating a little bit, but the point is, it's not that bad, okay? And sure, what's happening in the world is bad, okay? If you've been affected by the coronavirus, honestly, my heart goes out to you. It is horrible. But when it comes down purely to the stock market, you don't need to panic, okay? Now, there's another great quote by the amazing Warren Buffett that says, be fearful when others are greedy, but then be greedy when others are fearful. That's another quote that people keep repeating over and over again. Well, this is what's happening right now, okay? There is fear everywhere. Just go on the news, everybody's scared, okay? Everybody's selling their investments because they don't want to, experience those losses on paper, right? But on the other hand on the other side of the equation, this is really when you should be buying, okay? And I am personally buying. I'll get into that in a second, but you should be buying because you're getting incredible opportunities. People are very scared nowadays. They are selling their stocks, they're selling their funds, okay? They're getting out of the market as quickly as possible, and that drives the price of stocks and the overall market down, okay? You're getting pretty much the same business with perhaps a couple of tough years ahead of them for a really, really deep discount, okay? Basically, people are pricing in that, those bad years that are coming up are going to last to infinity. But that's not the case, guys, okay? Obviously, I can't predict what's going to happen, but I'm pretty sure, I'm 99.9% sure that they will go back to making good profits. That is as long as they are good companies, okay? And that they can actually weather out this recession, well, not technically recession, this bear market, okay? And the lack and the drop in earnings that they're probably going to experience. So basically, I've just explained that, things are bad now, but that doesn't mean that they will be bad in the future, okay? And once again, if we have a look at the, S&P 500 data, there are drops, there are big drops, okay, bam. Even the Great Depression, okay, in the 30s, that was a really big drop. But then again, it always recovers. And then past drops don't even seem that big anymore, okay? Even though they were bad at the time, okay? And look, it always recovers. And I don't know, maybe it might take a few years, okay? It might take a few years for it to recover. That's why you have to be a long-term investor. This is critical, guys, because, I don't know how much lower this is going to go. Like I said, might go down to 60, 70%, okay? I don't really know, but at least from my perspective, I don't really care that much, okay? I'm not looking at my stocks thinking, oh my God, I should probably sell. I should get out of the market. Things are going to collapse, okay? That's not going to happen, guys, okay? Society is not going to collapse. This really isn't a war, okay? This is not, a third world war. That would be really bad, okay? And even then, the stock market will probably do fine in the long run, just like it has done for during world wars, okay? So why am I so calm during this time, okay? Why am I not panicking like everybody else is? And that is down to my personal strategy, okay? My strategy is called dividend growth investing. I only really invest in companies that pay a dividend, okay? If you don't know what a dividend is, it's purely a little bit of the company's profits. It gets paid to you as a shareholder, okay? All you have to do is own shares in those stocks and you get paid those dividends, okay? But it's not just good enough that a company pays dividends, all right? Like there are there's thousands of companies that pay dividends. But I only focus on companies that pay dividends and increase them every single year. And I've been doing that for many, many years in a row, okay? Those companies have actually been proven to, in the long run, outperform the market purely because it's a fantastic filter. You're filtering out the companies that are okay, the ones that are rubbish, okay? You're filtering those out and you're sticking to, the blue chip companies, the big, robust companies that are going to weather anything that happens in the market, okay? Now, let me actually give you 4 examples of stocks that I've actually been buying over the last few weeks, okay, during this big crash. And I'm also going to show you what they do and also the number of years that they have been increasing the dividends. So first of all, we've got Caterpillar, okay? Caterpillar makes machinery. It's one of the biggest machinery producers in the world. And it's been increasing its dividends for 26 years, okay? So that means it kept increasing its dividends during the Great Recession, during the dot-com crash, okay? Through thick and thin, okay? It is a cyclical company, which means that, there's times when it does really well and times when it doesn't do that well, okay? It is very cyclical, but that's fine, okay? Machinery is going to be needed, okay? That's why I think Caterpillar, that's why I've bought quite a few shares of Caterpillar. Another one is VF Corporation, guys. I love this stock. I actually bought it quite a few years ago, and it's now actually got back to the price that I bought it at, okay? It went up by like 80 or 90%, I believe, in the past few years. It's got all the way back down, okay? But that's fine. I've kept earning their dividends. They've kept increasing the dividends. It is all good. And they have been increasing the dividends for 47 years straight. Okay, and again, they make clothing. They make shoes. Okay, they've got a lot of brands that you will recognize. And yeah, people are still going to need clothes after this coronavirus thing is over. I've also started a position, okay, which I didn't have before, in Aflac. I believe that's how you pronounce it. It's a company with a duck, and it's an insurance company, and it's been increasing its dividends non-stop for the last 37 years. Okay, remember. There's a lot of things that have happened in the last 37 years, okay? I wasn't even born 37 years ago. So that's how long the company has been stable. The company has been increasing that dividend, okay? Giving back to shareholders. And they make insurance, okay? They basically sell insurance. Now, obviously, insurance companies are probably going to be hit quite hard. due to people, taking time off work over the next few months or maybe even years, right? So, they're probably going to have a really bad 2020, maybe even a bad 2021, 2022, okay? But in the long term, okay? And that's why you buy stocks, guys. You don't buy them because of what's going to happen now. You buy them for what they're going to do cumulatively over the next 10, 20, 30 years, 50 years even, okay? Are people really going to stop needing insurance? No, of course not. Insurance is a vital part of society. People want to be protected. That's why I think, again, I'm really enjoying Aflac at these prices. It is so cheap. The dividend yield you're getting right now is through the roof. And then finally, one last company that again, I had on my radar for quite a while, and it's finally got to a good price. And that is A.O. Smith. They're, I believe, one of the biggest boilers and industrial heaters companies in the world. If not in the US, okay? They're a slightly smaller cap company compared to the other three that I've mentioned. But again, they make boilers, okay? People are going to always need hot water. It doesn't matter what happens in the world. Hot water is going to be needed. I can't imagine a world without hot water, okay? And again, 26 years of consecutive dividend increases, okay? So guys, those are the 4 companies that I've been buying personally. Those are just some examples of the kinds of companies that I think you should be focusing on. Because here's the thing, right? Let's say all of these companies didn't pay a dividend. I would probably be panicking a lot more right now. I would see their stock prices going down, and to me that would be money lost, okay? But when a company pays a dividend, and it's a stable company, you are pretty sure that it's going to keep increasing those dividends for the long run, all right? You don't really have to panic about the stock price, because I log into my brokerage account and the dividends are still coming in. Okay, the dividends are not related to the stock price. So whatever the stock price does, the dividends keep coming in. And that is the beauty of it. That is why I think this is such a great strategy. That's why I teach it, I preach it, and I personally do it as well. Because it really helps with staying calm. And during these times, that is the key, guys, okay? Good investors are able to stay calm. So you really have to do whatever is best for you. Whether that's not really reading the news too much, not looking at your portfolio or your stocks if you've already started investing, whatever helps you to not panic, okay? So that's really what I wanted to say, all right? It's now such an amazing time, such a great opportunity that doesn't really come around that often, okay? The last one was in 2008, and the people that stayed on the course, the people that didn't panic, the people that bought when it was slow, okay? It doesn't have to be at the bottom either, okay? Because that's something else that a lot of people mention. I'm just gonna wait till the bottom. Nobody knows when the bottom's gonna happen, okay? I have no idea when the bottom's gonna happen. So, if it's dropped, if you look at the companies and they seem that they are a good price and the company is robust, then perhaps you should buy, okay? That's certainly what I've been doing. And yeah, I'm basically getting some very, very good deals that, just a few years ago, I never even expected to be able to get. So basically, guys, that is it. That's what I wanted to say. I really hope that during my next video, things are better. I don't think they will be, unfortunately. I think things are going to get a lot worse before they get better. But, in 3, 4, 5, 10 years time, I'm pretty sure we'll be all right. Okay, at least that's what I really believe. That's what data shows. Okay, that's what the stock market data shows. And I love data. Okay, I'm very data driven. So yeah, guys, thank you for watching this video. Just give it a like and subscribe to my channel for more videos. I will be posting a lot more in the next few weeks, next few months. But yeah, guys, overall, let's be honest, this is a bad crisis. So just stay at home, please. Wash your hands. Be careful. Let's stop this disease altogether, okay? Just really take care of one another, and just don't be a fool, okay? Anyway, guys, thank you again for hearing me out. Hopefully, I've been able to just explain a few things, at least calm your nerves a little bit, and I'm convinced that in the long run, you will thank me for this video, or you will thank yourself for having bought stocks at such a big discount. Okay, that's it from me. Take care. See you later.